Ladies and gentlemen, bienvenidos a December. Welcome to December. We have a lot of interesting earnings names this week. We're going to go over my thoughts on them prior to the report. We're also going to show you how to trade them after the report. We're going to go over Coupa Software, CRM, Home, Five Below, Synopsys, Signet, CrowdStrike, DocuSign, Ulta Salon, and Zoom Video. Some of these stocks are severely undervalued. We're going to go over that and more. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So, earnings season does continue. We do still have a lot of nice names on the list to watch. Not only that, I'm going to give you free access to my entire earnings list. I'm also going to talk about stocks which I feel are severely undervalued prior to the report. By watching this video, you are going to agree to a disclaimer, which I will show you right after I show you the agenda. Your screen turned black. Don't worry about it. It is right over here. That is our agenda, but you're going to pause and agree to that slide. Thank you so much for agreeing to that slide. Let's get right into it. We're going to start off. Don't want to take a lot of your time tonight. Coupa Software. That's C-O-U-P. Let's just take it right over to the daily charts. And, all right, you can see right here, like many stocks, this one has been climbing up. And again, throughout all these names, I will be adding whether I'm bullish or bearish on them into earnings. I also officially added them to my list. You can also access the list for absolutely free, and we'll show you how to do that again near the end of the show. So let's just go ahead and talk about their prior earnings. They reported 5 cents a share. That beat the loss of 10 expected, 95.14 million ahead of the 85.38 million. Of course, that was back on September 3rd. That was right over here, and the stock actually gapped up about $15, $15.09. Stock had a massive gap up, but Mark Melnick doesn't care much about that. I want to know their future projections. For this quarter coming up, they said that they would make 5 to 8 cents. That is on average 6.5 cents versus the 6 expected, but they said 95.5 to $96.5 million in revenue, and that is well ahead of the 86.9 million in revenue. They also raised their fiscal year 2020 revenue 11 to 16 cents versus the 11 cents expected. And to me, that's a bullish thing. Basically, they're saying, in the worst case scenario, we're going to meet your expectations. They also saw revenue in 2020. They raised it 369 to 372 million, and that is ahead of the 347 million expected. So I will be coming out officially on the record bullish on Coupa Software. So we're just going to go ahead and oops, wrong one. There we go. Right there. So bullish on Coupa Software into earnings, and just keep in mind these names are reporting in order. Actually, they're actually in sequential order. Next one on the radar is Salesforce. That is a very interesting name. CRM. Let's just take it right over to the chart. Chart has been digesting really nicely. Definitely one of the hotter software companies out there. Definitely appreciating the market going vertically up this entire year. Let's just take it back a little. I want to take you back. I want to take you back just not too far ago. It was August 22nd. It was a cold day here in New Jersey. Stock gapped up, right over here on earnings. They gapped up about $9.50, just short of 10 points, and then sold off a little. Let's talk about what happened on that day on August 22nd. 66 cents. That was ahead of the consensus of 47 cents. They announced $4 billion ahead of the $3.95 billion. But I'm again more interested. What do they think they're going to report this quarter? 65 to 66 cents a share. That's ahead of the 61 cents expected. 4.44 billion to 4.45 billion ahead of the 4.25 billion expected. Not only that, they raised their fiscal year 2020 earnings per share view $2.82 to 284. That's ahead of the 251 to 253 expected. This stock can explode on earnings. This stock should crush all the numbers. Again, um, 100% of these don't work. You could actually see our track record with the entire earnings season, and we'll share that entire list with you shortly. But just for the record, I will be coming out extremely bullish here on CRM. It's hard to imagine them missing, but I guess we'll see what happens. So for the record, I am going to be bullish. So this is the smallest name I'm looking at now, Home. It's actually At Home Group, HOME. It's like a $550 million company. I tend to shy away from companies sub-billion dollars, in all fairness, but this one really stood out to me. Let's go ahead and talk about it. They announced earnings last time on September 4th, and that was right over here. And they actually ended up gapping down. They announced 18 cents, beat the 15 expected. A little light on revenues, 342.3 million versus 342.9 million. But this is, what sort of turned me off. They backed an earnings per share view, 67 to 74 cents for 67 cents expected. Most people would say, okay, that's pretty good. Mark, they're basically saying in 2020, the worst they're going to do is come in line with consensus earnings per share. Yes, true. But for this quarter coming up, the company actually reported that they were going to lose 4 cents to 1 cent a share. They're going to lose -4 to -1 cent a share. The street was expecting 5 cents. They said they were going to make 312 to 317 million dollars in revenue. That still falls short of the 320.4 million in revenue. For the record, I will be coming out on Home bearish as a result. Definitely going to keep an eye on this one. So again, officially just on the record, I will be bearish on Home. This is a store which has always baffled me. I'll tell you right now, this store has always baffled me, and that's Five Below. It's just one of those stores where you step in and you look around and you're like, you've got to be kidding me. You've got to be kidding me. How much is this company worth? And then you look, you go ahead and you do a Google Finance look, and it's worth almost $7 billion, and you're like, they're selling like Hershey bars and not even that inexpensive candy. Like the worst place to go Halloween candy shopping is like Five Below. And I was just so turned off by the store. Again, I come from the ghettos in Brooklyn. I appreciate a bargain when I see it. Five Below is like the fake discount store. Like you go in and it's like, this is all made in China garbage in which I could buy on Amazon if I wanted that stuff cheaper, delivered to my house, and I didn't have to drive in a large mall parking lot and walk into this huge store. Like that's how I feel when I step inside a Five Below. Okay, doesn't matter how Mark Melnick feels. Let's see how the customers feel. Let's see, more importantly, how Five Below feels about themselves. They last reported here on August 28th. Right over here, stock ended up gapping up just short of 10 points, $9.71 to be exact, and they gapped up. They announced at the time 51 cents was ahead of the 50 expected, 417 million to 421 million expected. They said next quarter they were going to make 14 to 17 cents a share. That's versus the 24 cents expected. 369 to 374 million versus the 376.9 million expected. No, 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 no. That is disgusting. That is bearish. That is negative. I am shocked that a company like this can hold up itself, you know, where it is, and I will officially be coming out bearish on Five Below. Just an absolutely, you know what it is? It's one of those companies that you step inside and you look around and you're like, there is a 0.00001% chance that this company will exist in 15 years. Like that's the first thing you think when you step foot inside that store. It's like, no, this is unsustainable. This is complete. Look, if you're a store that capitalizes in selling stuff that says made in China or made in Taiwan on the back, I am telling you right now, Amazon is going to decimate you. And given this holiday season, I do not know people who would want to step inside a Five Below. Okay, I'm done talking about it. Let's go into Synopsis over here. That's Sam, Nancy, Peter, Sam. They're reporting this coming week as well. They last reported right over here on August 21st. The stock ended up gapping up nicely, actually. Stock gapped up $7.16, ran up a little, fell, started grinding up with the entire market. They announced $1.18 versus the $1.10 expected on their last earnings report. 853 million was ahead of the 831 million expected. But you know how Mark Melnick feels. Take me into the future. $4.52 to $4.57 was the raised fiscal year 2019 adjusted earnings per share view. That was a raise from 424 to 440. So they said 452 to 457. That is absolutely bullish. They raised their fiscal 2019 revenue view 3.34 to 3.37 billion versus the 3.3 to 3.35 priorly reported. So the company is just basically coming out and saying, yeah, those numbers you thought that we were going to hit, we're going to be a little bit ahead of that. As a result, very easy for me to be bullish here on Synopsys. We're going to go right into Signet Jewelers. And this is a stock in which I've been bashing for a while, fundamental. Again, I have nothing personal against these companies. Yes, I like a Snickers bar just like the next person who wants a stomach ache and a foggy brain the next morning after eating a couple, full bags of them. Anyway, looking at Signet Jewelers, like this is a company which I never understood. I walk to the mall here in New Jersey. We have more shopping malls than anywhere in America. And I walk by Signet Jeweler and I'm looking in the window and I decided to screw around because I had to. So, of course, I did something you weren't supposed to do. I take my wife and I say, come, come, sweetheart, come, 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 come. And I go to the guy and take my wife's hand and I say, how much will you offer me for this ring? I had to see. I had to see. So guy calls out his manager, this, that, this, that, this, that, this. Talking it over. I know how much I spent for my wife's ring. I'll tell you guys, but not her. But like, I go to the Signet Jewelers and they're literally offering me about $7,000 more than I paid for my ring. They had comparable rings. It's a round cut ring with comparable clarity, comparable color, and everything. It was 4 times more expensive than what I paid for it. And I'm a New York boy. I go to the Diamond District. Honestly, on this one, sometimes I go to the Diamond District. On my wife's ring, I actually ordered it off of eBay. I ordered a loose stone from a reputable seller. I ordered a band. I had the band sent to the jeweler, connected it together, sold it to me. Absolutely beautiful ring, and I just had it redone with the little crown around it. My wife wanted it. Um, but the bottom line is, I was in utter shock at what a ripoff this is. Like, there's a running joke I have with my wife. It's like, we walk by. You ever see the Jared's commercial? Like he went to Jared. So like we joke around, my wife and I, and I'm like, you know why I broke up with him? And then she's like, why? Because he went to Jared's. Because he obviously has no financial savvy whatsoever. This people are done getting ripped off on jewelry, ladies and gentlemen. People are done getting ripped off on jewelry. And I was bashing this stock in the 60s and the 50s and the 40s. Now it's down to $18. I'm just going to say it. I am actually going to come out bullish on Signet Jewelers for the first time ever into this report. I know they last reported on September 5th, which was right over here. The stock gapped up like 30% plus. It was just like boom. And then the stock is continuing up here. This stock is probably going to crush it. You know why? Because when people have extra money in their pocket, the average American, I hate to say it, with their 401ks doing well and everything and holiday time, I think people are spending money. Now, there are reports coming out all over from every news media outlet saying Black Friday sales and the lines weren't that long and this and that and this and that. And I'm like, yeah, because people have what's called the internet. Welcome, welcome, media sources. It's called the internet, and people like to shop at home because they don't like to get trampled in a crowd of hungry hooligans fighting over a doorbuster deal. Welcome to reality. I think people are stupid enough to spend their money at Signet Jewelers. Hey, look, I've used those mall. I bought my first money trading. I bought a Movado watch from a mall store for $650 at the time. That was the first money I've ever spent on a like something nice for me from trading. Let okay. They announced 51 cents a share last quarter when they gapped up here, this 30% right here. That was ahead of the 24 cents expected, 1.36 billion ahead of the 1.34 billion expected. Now, don't get turned off here. You ready? They said next quarter, the one coming up, they were going to lose $1.16 to $1.02 a share. That's versus the loss of 89 cents expected, so that is indeed worse. However, they saw revenue 1.14 to 1.16 billion. That's ahead of the 1.13 billion expected. Not only that, they raised their fiscal year 2020 earnings per share view 291 to 323. That's ahead of the 288 to 317 expected. I think given the fact that the market has been going up like this right into the holiday season, Thanksgiving, um, here's the bottom line. If you were looking to propose to your if you're looking to propose to your significant other on Christmas or Hanukkah, you might have just been crazy enough to last minute in Signet Jewelers. With the market trading at the highs of where it is, everybody who's involved in the stock market has likely a little bit more money in their pockets. And as a result, I again, I'm shocked I'm saying this because when it was at 60, $70, I thought it was going to go to five. I don't think it ever quite got down there. It actually got down to $10, 40 cents. But as a result of everything I said, I will officially be coming out bullish, believe it or not, in Signet Jewelers. Let's go into CrowdStrike. Now, CrowdStrike is a name that is obviously has geopolitical, more domestic political, I guess slightly geopolitical ties because they were the ones who, got access into like hacked documents and whatnot. I don't want to go into the geopolitical nonsense of everything, but they are a very looked at company and they immediately made a name for themselves after getting involved in the geopolitical field. They last reported here on September 5th, right over here, and the stock, gapped down about $7. At the time, they announced a loss of 18 cents versus the loss of 23 cents. 108.1 million was ahead of the 103.79 million expected. So you might wonder, like, well, why did the stock, gap down then, Mark? Well, right over here, hold on. They announced for next quarter rather that they were going to lose 12 to 11 cents, but that's versus the loss of 13 expected. They said they would make 117 to 119 and a half million. This is for the quarter coming up, for the earnings report coming up, versus the 111.2 million expected. For 2020, they said they were going to lose 65 to 62 cents a share. That's versus the loss of 73 cents expected. They said they were going to make 445.4 million to 451.8 million versus the consensus of 434.92 million. I know it sounds weird, but every single time you have more, geopolitics heating up in the United States, this is the company. The CrowdStrike CEO said on September 12th that we focus on stopping breaches. And they said Amazon Web Services is a great partner for us. Walking into an election year soon and everything going on and the raised expectations, I can't imagine them, missing the expected expectations. I know all the analysts are like neutral. A lot of neutral ratings came out on this. Last analyst was D.A. Davidson, calling it neutral with a $55 target. The stock's at 58 now. D.A. Davidson did that on November 18th. I am officially going to be on the record bullish on CrowdStrike here. I like their numbers that they feel they could report. Again, extremely, extremely bullish here on CrowdStrike with everything going on. Next on our list is going to be DocuSign, another software company. Feels like this is like the report of all the software companies, right? Feels like all the software companies are reporting, doesn't it? So on DocuSign here, they last reported right here again on September 5th, and the stock gapped up massively, like went from 46 and a quarter to 55.70 from the closed open on earnings. They um they announced 1 cent a share. They missed the 4 cents expected. They announced 235.6 million for ahead of the 220 million expected. I throw that out the window. Show me what you see coming in this quarter. 237 to 241 million. That's versus the 232.05 expected. They raised their full year 2020 earnings 947 to 951 million from 917 to 922 million. So they're raising across the board. The consensus for 2020 was 920.4 million. Extremely, extremely bullish here on DocuSign. I will be on the record coming out bullish. So the next one we're going to speak about is obviously a name that, it sort of triggers people just by talking about it in the first place, and that is Alta Salon. And of course, as you know, Alta Salon got decimated on earnings, decimated last time. On a poor earnings report, the stock. So many people ask me about this one, like, Mark, can this one come back? And the answer is, of course they can. But here's my thoughts. On that last earnings report when they got decimated, where they closed at 337 and opened up at 253, the $84 drop. Um, on that earnings day, just to bring you a little blast from the past, they announced 276 per share versus the 280 expected, slight miss, 1.67 billion versus the 1.68 billion expected. But here's where things got groggy. They cut their fiscal year 2019 earnings per share view 1186 to 1206 from 1283 to 1303. I'll be honest, I did think they oversold it a bit. I thought they oversold it just a bit when that happened. I mean, this stock might be the one to come out and surprise, but given the lowered estimates, given the fact that, there's no reason for me to think that this thing is going to be extremely bullish. Again, this thing could report earnings and it could be better. It could be bad, but not as bad, and they could gap it up, especially after getting beaten up like this. But I will come out on the record officially for number 9 Ulta Beauty Salon bearish. Oh, I did save the best for last. I did save the best for last. We're going to talk about Zoom Video here. So Zoom Video was a bit of an interesting name. This is one of those companies that I was never able to understand why the stock got pummeled on earnings on September 5th. So September 5th is right here. It actually opened up only down 69 cents and like plummeted. It literally dropped like 15 points in 2 days. Stock got as low as $60.97 back in October and now grinded back up to 74.50. At the time, they announced 8 cents per share. That was ahead of the 1 cent expected. 145.8 million versus the 130.3 million expected. For this quarter coming up, they think they're going to make 3 cents a share. That's ahead of the loss of 1 cent consensus. They had revenue of they see revenue coming up 155 to 156 million versus the 140.4 million expected. Not only that, for the year 2020, they said they're going to make 18 to 19 cents a share. That's ahead of the 3 cents expected. 587 million to 590 million ahead of the 545 million expected. 10% higher in revenue. Yeah, we're going to make $50 million more than you predicted us. That's real money. This is not an Amazon or an Apple. I mean, it is a $20 billion company. And it does have, you know, an obnoxious PE ratio. That was the only reason why I could think of that. But again, I'm not looking to be a long-term investor in Zoom Video. There is not the numbers they reported before were phenomenal. The stock is trading. The stock was trading $20 lower now than where they were last earnings season when they announced all this good news. The earnings are phenomenal. As a result, I am very bullish in Zoom video. We're going to go into the next thing, free access to my earnings list. So if you guys don't know already, I have been offering all my earnings picks for free. You're more than welcome to take a look at it. I have a lot of Newsbeat Live members who are making their years focusing on this. We actually went ahead and we hit a cute little milestone where you would be up, considering you entered at close and exited at open. You would actually be up taking every single one of our names, of course, the good, the bad, and the ugly, and the pretty. You would actually be up. This is based off a $100,000 bet. You'd be up a little over $100,000. So basically, if you were betting, 10,000 per trade, you'd be up 10,000. If you're betting like 50,000 per trade, you'd be up 50,000. We actually broke this like the your bet level for earnings. And again, these are done mostly on large cap names. Like I said, there's a home here, which is like 550 million, but for the majority of them, they're multi-billion dollar companies. Not only that, if you want to know my opinion on the names that haven't reported yet, they're right over here. Not only that, if you wish to see all of the names I reported, there's a link in the description. There is a free link in the description of this video. Just simply copy and paste it in your browser if you want to see it. It's viewing only, and you could take advantage of that. I wanted to also share my final thoughts here on number 12. So, what we actually offered you guys is these earnings ideas are meant to be prior to the report. They're all based on buying it the day before they report. So, if they're reporting on, Monday after the close or Tuesday morning, you would have to be involved in it Monday before the close or at the close, whatever, right? At the market close. If it was reporting Wednesday afternoon, you would have to be Wednesday at the close. If it was reporting Wednesday morning, the stock, you'd have to be in Tuesday after the close. You could go very simply if you want to see if you're asking, Mark, when are these names reporting? Don't pay money for any service like this. Just go to earningswhispers.com. Whispers is let me just try to do it. It's just literally earningswhispers.com. I'll take you through it. Just go to earningswhispers.com and you don't even need to sign in. Just go ahead. You'll see the first button on top, calendar. Go ahead and click that. And after you see it, like right over here, it says like Monday, December. It's Monday, December 2nd over here. See the calendar? You could just literally click AMC here, which is after market close. And you could see like Coupa's reporting right there. And then you could just literally left click on Tuesday right there, and it'll come before market open. You could see which stocks are reporting before the market open on Tuesday. Then you could click after market close. It's literally free, just like my earnings list. Take advantage of all the value that we're bringing for you here that has absolutely zero cost to you. Another thing you could take advantage of is we literally just did a video. We literally just did a video which shares with you, which literally shares with you every single strategy that you could do intraday on these earnings names. We gave you four consistent strategies that are all batting for us 70% or higher, a lot of them in the 80s. Four strategies to remain consistent on earnings names this week. It literally teaches you how to trade these names intraday and shares with you the strategies in which we do so. So not only that, you get what we're thinking prior to the report, you get what we're looking to do after the stock reports, and we're bringing all this value to you for free. And of course, if you want to actually see us do these things in a real-time setting, you'd obviously have to be in the room. If for whatever reason you can't become a member at this point, enjoy the value we're bringing you. What do I ask for in return? Your social security card and credit card number. Or you could slap the like button right now. Let me know that you enjoyed the content that I put out for you tonight. That's all it does. I actually don't monetize these videos. YouTube and Facebook do not send me a check for doing these videos. But I do get gratification knowing that you enjoyed my content and you were able to garner some value from it. I hope you guys enjoyed this Newsbeat show. Happy trading, make money. I will see Newsbeat Live members tonight for the group coaching session, and every Newsbeat Live member tomorrow, Monday morning, on the Newsbeat Live trading broadcast. Have a wonderful, wonderful evening.